Hey, good morning, everyone. Tim Stenovic is off today, but you have me here. And today we're starting with the U.S. jobs numbers. They're out this morning. Growth is trailing analyst estimates, but still picking up some steam after a disappointing April. All this signaling firms are making some progress, filling a record number of openings as the economy powers up. So here to discuss, we have a full house today, is Bloomberg Intelligence's chief industry economist Carl Riccadonna, White House reporter Josh Wingrove, and co-host of Quicktake Stock, Katie Greifeld, here with me in studio. Thank you all for joining us. Carl, let's start with you. First of all, we heard from our Bloomberg T Live that this is not a fantastic, but not a bad jobs report. Give us your read on it.
Well, this is not a great jobs report. If we look at the number, we can see a huge influx of returning workers in the leisure and hospitality sector. But as we look beyond that sector, which obviously we should be seeing some big job gains in that sector, was most severely hurt by the pandemic and social distancing. But as we're reopening the economy, if we look at payrolls excluding that sector, we're not seeing much of an acceleration here. And so this tells us that while the economy may be growing great guns in the current quarter and probably over the course of the summer, the labor market is much more sluggish. And there's a couple of factors there. One, obviously, is the generous unemployment benefits that are still in place in a lot of states. About half of the states still have the federal match that makes it enticing to collect unemployment benefits instead of taking a job at $15 an hour or less. But also we have a lot of schools that haven't fully reopened, which then constricts parents from fully returning to the labor market and whatnot, and a lot of frictions and mismatch as we try to reopen. So this tells us the road to recovery is going to be potentially a lot longer than many forecasters were anticipating.
Yeah, and Josh, as Carl mentions, I mean, unemployment benefits have been something that we've been talking about a lot here. Of course, as he mentioned, a lot of states have been rolling those back. What are we hearing from the White House in response to this current report?
Well, we'll start hearing from them at about 9:30, and then from the president himself later in the morning. It's kind of a sweet spot report for him. There's plenty here that Joe Biden will talk about, putting aside the sort of fine print of the report. I mean, he can talk about 500,000 jobs, he can talk about a falling unemployment rate, and he can use it, the underlying weakness, to sell his continued push for an infrastructure package, either a mini one on a bipartisan basis or some sort of effort with Democrat votes only to pass his American Jobs Plan, the second of the three big bills that he has proposed. And so, he kind of, I guess, was hedged a little bit both ways. I mean, they want good numbers. He, I'm sure, will talk about good numbers. I mean, overall, Biden tends to gravitate towards downplaying the impact of any one report. We saw him do that with the April report, and I suspect we might see him do that as well today. But he, like I say, politically, he's sort of trying to have it a bit both ways. He wants to celebrate the progress being made, but he's trying to pass a bill. He says more help is needed. And so the underlying weakness presumably will be cited in his continued push for that.
And of course, what can we expect to hear from the GOP side, though? I mean, you mentioned Biden. This is a sweet spot for him, but how do Republicans respond then?
Yeah, I mean, the calls have been overall that we don't need a bunch more money going into the economy. These aid packages as proposed are too much. The economy is recovering on its own. That's the view of Republicans. We're sort of still waiting to see whether enough Republicans might be able to get a deal, in particular on the sort of pay-for side of things for an infrastructure package. Biden is supposed to connect with Senator Capito again today to talk more about that. But, the other complaint you've heard from Republicans, of course, has been what we alluded to earlier, these unemployment benefits being too high, being a disincentive for people to get into the workforce. There's a little bit of evidence in this report from a quick glance so far that those arguments have some merit to them. We're not seeing the participation rates coming in as much as they can. But Joe Biden will, I think, point in particular to wages. Remember, he gave a speech a week or two ago in Cleveland saying that rising wages, in other words, McDonald's, Home Depot, this thing, posting a sign saying how much they're going to pay hourly, going up and up and up. He thinks that is a feature and not a bug. In other words, he wants to see more of that. He's not too worried that companies are having to raise wages to get workers into the system.
And also, we have Katie Greifeld here with me in studio. Katie, what are we going to see from the markets in response to this?
Well, stock markets aren't open yet officially, but we do have futures trading, and it looks pretty green right now. You have S&P 500 futures, for example, up 0.6%, and that's because even though this was a weaker report than expected, it wasn't a disaster. If we think back to what we got last month in May for April, that was a disaster. That was one of the worst misses on record, whereas sure, this was weaker than expected, but not by much. So the calculus here by stock investors is that, okay, the economy, it's still on the same upward trajectory. But like Carl said, the road is going to be longer than a lot of economists expected. And this report was just a reminder. So that means probably the Federal Reserve, the federal government, they're going to keep supporting the economy. That's generally good for the stock market, and that's what's playing out in the price action so far this morning.
Absolutely, Katie. I'm glad you mentioned that because I did want to ask, how do we see the Fed responding to this? Carl, I want to get your take too.
Sure.
Well,
Katie, we'll start with you.
I'll start.
Yeah.
So the Fed, they probably won't comment on this support or this report specifically. They've said in the past they want to see a series of good data before they would consider dialing back any of those crisis era policies they put in place to support the economy during the pandemic. So this is just one in what the Fed is viewing as a series of reports. And again, it's not a disaster by any means. You did see wage growth, for example, rise more than expected. That's generally a good thing for the Fed since they are trying to get their inflation readings back up to target. So they're probably looking at this report, not anything that changes the needle or moves it at all, but again, just in a series.
Absolutely. Carl, what's your take?
Yeah, just following up on the points that Katie made. In Fed parlance, they want to see a string of job reports in the vicinity of 1 million per month, and they want to achieve substantial further improvement in the labor market. And if we're seeing more jobs reports like we saw in April and May, this is a much longer road for the Fed to see a full recovery. Jerome Powell is very concerned about scarring, economic scarring in the economy. And when we have folks out of the labor market, the longer they're out of the labor market and not participating, the more their skills atrophy and they may be less of a good fit for future employment. And so, if we look at kind of the moving averages on employment over the last couple of months, this tells us that substantial further improvement that the Fed wants to see is going to take a lot longer to achieve. And so Jay Powell has said we don't even want to start talking about pulling back on the monetary policy throttle. But some of his colleagues on the committee have started to get a little more nervous in recent months and said now is the time to start talking about that. Today's report will very much fall into the favor of Jerome Powell saying we need to keep the economy at full throttle a good while longer because there's a lot of slack here to absorb. If we look at the level of employment now compared to where we were in February of 2020 before the pandemic was really understood in terms of what the economic consequences could be, that jobs deficit is about 7.8 million workers, fewer now compared to that earlier period. If we're creating jobs at a pace of 500,000 per month, that's going to take us well into the back half of next year to really fully absorb that labor slack and achieve the substantial recovery that Jay Powell's looking for. The other point I'd make, just in reference to what Josh was highlighting, we did see a drop in labor force participation. This is not a good thing. We saw a huge number of individuals dropping out of the labor force over the course of the pandemic. Some of that was fear over catching COVID. Some of this is the inability to have a job because maybe your children are doing at-home learning and you can't find alternative childcare. And some of this is simply pessimism, sensing the economy was in a very rough patch and just dropping out of the labor force temporarily. So if folks are dropping out of the labor force, then that actually causes the unemployment rate to decline. As we see the economy strengthen over the course of the next several quarters, I suspect you'll see that labor force participation rate move back higher. That means more people are participating in the labor market. As they do that, that's actually going to create some upward bias on the unemployment rate. And that's a very telling signal that there is plenty of slack in the economy. And so if we're looking at things like labor inflation and average hourly earnings and whatnot, sure, as the economy's reopening at a brisk pace in the current period, that you're going to see some of those frictions showing up in higher average hourly earnings. Over the long run, though, that slack in the labor market is going to cause that pickup in average hourly earnings to start to level out later this year and into 2022. And ultimately, you won't get consumer inflation if you don't have wage inflation backing it up. And this is fundamental to Jay Powell's view of the world, meaning that he's going to say there's a lot of labor slack. The inflation pressures will be transitory. No need for the Fed to rush into action at this point in time.
Absolutely, and it will be interesting to see, too, when kids return to school, sort of how that has an effect as well. Josh, I want to end on you. President Biden is trying again to pitch his infrastructure deal to Shelley Moore Capito today. What's his suggestion going to be? What's he going to say?
Well, I mean, his suggestion is that we got to do something. That they've called that their red line, not a particular policy proposal, but just the fact that he wants to do something rather than nothing. There are, of course, questions about what he'd be able to do without Republican support, so he's got a little bit of incentive to stay at the table. He has floated this notion of, instead of pursuing a 28% corporate tax rate, rather than that, going with a 15% minimum tax. This is aimed, of course, at Amazon and others that he's singled out for not paying, anything, or at least a significant amount in federal taxes in recent years. So, we'll see. I do not expect them to have like a deal today. This is a step in a process. Biden has warned the clock is ticking, but he hasn't set a drop dead deadline. The one thing I would also add, just on the jobs report, remember, it was only mid-April that vaccinations were fully open, eligible for everyone. This month, they're doing a month of action, quote unquote, to try to get people, kind of a last mile effort to get vaccines into arms of folks that haven't gotten it yet. It hasn't been all that long. It's 2 weeks to 6 weeks, depending on which vaccine you get, from the time you get your first shot to the time you're considered fully vaccinated. So if folks were just getting their first shots in April or even last month, that could be connected to some of the labor force participation numbers we're hearing. People aren't fully vaccinated yet in a lot of places, even if they have decided to get it, and others still are yet deciding whether to get it. That could be some of the explanation.